Welcome to the Market Enthusiast podcast, where Good Life's Noah Brooks, Chief Market Strategist, and Chris Needs, Senior Research Analyst, break down today's topics, covering their impact on the economy and personal finance in a fun, easy-to-understand way for investors of all levels.
Welcome to another installment of the Market Enthusiast. I'm Noah Brooks, and with me, as always, Chris Needs.
Hello, hello.
So the market is bouncing around a little bit, not particularly loving Liberation Day, right?
Yeah.
I'm not 100% sure what we're going to be liberated from, but there's definitely a lot of uncertainty about what's going to be announced later today. So by the time everybody listens to this, there'll be an announcement on tariffs. It sounds like the president is going to come out and put a 20% tariff on all goods and possibly services that are being imported.
Yeah, I've seen varying things, like the simple broad 20%. Then I've seen other ones where they're going to try to aim to be more reciprocal in nature, maybe bringing to light the fact that they've had tariffs on us, whoever, the given partner has already tariffed us, and that this isn't us escalating. It's more so us bringing out into the light the fact that maybe it hasn't been the fairest relationship in any given trade partnership. But yeah, the market's definitely been more volatile. The last 3 days, it's been, scenarios where we've opened up down, in the area of say 1%, and then we've worked our way back to positive, where we're seeing that again today on Wednesday. And, we'll see if the gains hold. They faded a little bit yesterday towards the very end of the day. Yeah, interesting to see.
Listen, one day, 2 days, a week does not make a month, and certainly does not make a year. I want to go back to something that you just said, though. You called out the reciprocal tariffs, and we were talking about it yesterday, and you had a really good point. I didn't hear anybody mention it the way that you had brought it to light. You essentially said that in terms of the marketing of this, they did a pretty poor job, because these tariffs are tariffs that are currently on our goods and services that are being exported. And some of these tariffs, certainly not all of them, and if they do 20% across the board, that's a game changer. But some of these tariffs that they're naming reciprocal tariffs are because our goods are currently tariffed going out. I don't actually have a list of all of the items that are tariffed, but if there are tariffs being placed on our current goods, I'm curious as to what the rationale for some of that stuff is.
Yeah, certainly. I did a deep dive into this was about a month ago at this time, when everything was blowing up with Canada, into their tariff schedule. And despite USMCA and prior NAFTA, they, especially on agricultural items, they really crush us on tariffs. I guess that's just not included, or is only, in many cases, what I saw is it for like under 10 metric tons or some weight, there's nothing. But when I think it was on poultry, that turned out to be like 3/4 of 1 month's trade. So then the rest of the year, they were charging like a 290% tariff on poultry, essentially locking us out of the market. And there's similar situations like that abroad. That's just, the one I can confirm. I actually had written down from one of our previous ones, like, I think 270% on milk, 245 to 293% on cheese, 238% on chicken, 165% on turkey. It's just like a couple weird ones where it's like, that's Canada, our ally, that's hitting us with that level of tariffs.
Yeah.
It was kind of surprising, but you're right. The messaging was messed up from the beginning. For a while, this is to raise revenue, to pay for tax cuts. And then, for a while it was to secure the border. And now it's just sort of broad, bringing to light the fact that, people have kind of been possibly taking advantage of us for a while. We've already had our manufacturing and the nature of capitalism and free flow of trade for the most part. A lot of our manufacturing has left, and some of those countries that took our manufacturing tariff our stuff too. It's like you're getting us on both ends. So I'm not a tariff guy, but at the same time, you know, we do have to bring this stuff to light.
I think here's the one of the issues that I have with this. Depending on what you believe, you could say that the tariffs, the entire situation, is some type of bargaining or negotiating chip or tool, which is certainly possible. You could believe that having the tariffs on there will actually bring money into American coffers. Not sure that that's actually the case. It seems more like a tax that consumers pay. It doesn't seem like it. That's what it is. If the price goes up, it's some type of alternative tax. But if it is some type of bargaining chip to get, let's say, a better deal, and that could be no tariffs on current things that are being tariffed, or just some type of better trade deal in general. I mean, I'll go so far as to say that makes some sense in this world. The thing that seems a little bit of more of a, let's say, a cognitive dissonance in that respect is that if it is a bargaining chip and we go out and we get some type of better deal, then the idea of bringing back the manufacturing kind of flies out of the window. I mean, if the goal is to bring back manufacturing and you go out, you get a better deal, how is that going to bring companies back in?
Mm-hmm.
It's kind of just to go back to where we were a year or two ago, or maybe 5 or 10 years ago. And so it doesn't seem like there's going to be any real change in terms of bringing back manufacturing in my mind. I could be wrong on that. We've been talking for weeks about a carrot versus a stick, right? So in current situation, it seems like a stick. I think companies are more inclined to bring back manufacturing with a carrot.
Mm-hmm.
Although we haven't had a great resurgence of manufacturing, there's been some.
Yeah.
The CHIPS Act spent a lot of money and is spending a lot of money on certainly bringing back high-tech manufacturing, not low-tech.
Mm-hmm.
I mean, we're never going to make brooms in the United States. Sneakers, I think there's maybe one manufacturer in the Northeast, NB, right? New Balance. They have a small plant in Maine, if I'm not mistaken. But I don't think we're ever going to bring back low-tech manufacturing. At least it doesn't seem like that at the moment.
Totally agree. And to your point about, carrot and the stick, the stick, here's the tariffs. We're going to penalize you for having outsourced everything. And then, what we've heard, and there's no proof of this yet, but, the carrot would be that they're going to offer a lower tax rate, once we get into the tax discussion for manufacturers that come back. I think 15% is what was lobbied around during the election. We'll see if that ultimately comes to pass. We got a little bit of breaking news today. Reports are that President of Mexico, Claudia Sheinbaum, is not going to escalate the trade war and will not put reciprocal tariffs on. They just had yesterday a call with Canada, so it was interesting to see her come out with that when I don't think Canada is going to relent just yet. It
does not seem like it.
Due to how inflamed those conversations have been, obviously.
Yeah. No, it seems like, especially with the new Prime Minister of Canada, what did he say? He
new
was
relationship.
Well,
the old relationship's over.
Relationship is over, but he even went so far as to suggest that they have their elbows out in reference to hockey, right? I don't think that's dirty in hockey. That's just being a wide defender, maybe. I don't know. And I think that's where they are now. That can change. I think if I had to do it, I wouldn't have done it this way.
Yeah.
It doesn't seem like the appropriate way. But, I think in the end, I don't know that there's a single person out there that actually knows how this is going to pan out. And I don't necessarily think the president knows how this is going to pan out.
Yeah, honestly, he has to speak in very strong terms, because he can't have everybody knowing that, say his intention is not to have tariffs on for the next 3 years. Maybe this is a short-term, maybe negotiating ploy, but he can't let people know that. Because if they know this is just a negotiating ploy, they'll just say, all right, we'll call your bluff, and we know you don't want to do this long term. And, then things get even scarier and more volatile with people calling bluffs and escalating tariffs coming in every day, headlines. But yeah, so, potentially, I think this is the best case scenario is he's talking tough, telling it like it is, and then there's some negotiations after they go on. After this announcement, we'll see at 4 p.m. today, over the next month or two, people start seeing those taxes hit and what it's doing to growth and to companies, and they start to walk it back. They start calling each other. Lutnick gets on with, whoever his counterpart is in the European Union, and they start walking it back. And now those will turn to positive headlines, which would be nice. But nobody knows. Like you said, no one knows right now because, like you said, he has to pretend they're going to be forever in order to get the concessions that would benefit the U.S.
I feel like it comes down to the resilience of the American consumer. For years, the consumer has been one of the main drivers of the overall economy.
Mm-hmm.
I mean, you don't get a stock like Skechers or who's the sandal company, Crocs. Crocs doesn't become $1 billion company because the American consumer is in a bad way,
Right.
I mean, it just seems like we don't know what's going to happen with the American consumer.
Mm-hmm.
If there's a pullback, if you and I start to slow down on our spending and everybody else does, you're going to see that in GDP, and the market is going to have some type of equilibrium or paradigm shift, right?
Yeah.
And I think that's what you've been seeing right now is not necessarily a paradigm shift, but the idea that everything's perfect is kind of eroding a little bit.
Yeah.
For the last 2 years, everything has been perfect. The Fed has been setting up to lower rates, which we know hasn't really happened. And we have a market that is relatively overvalued. Not relatively. It's over.
Some shine has come off those Mag 7 stocks.
Yeah.
Obviously, everyone's been talking about it, but in the first quarter, the Mag 7 down 15%.
Yeah.
The other 493 positive 0.5%.
Yeah.
Sure, 0.5% isn't knocking the cover off the ball, but compared to negative 15%, that is a drastic rotation.
Well, what we see here is there's a giant difference year to date between growth companies and value companies. And as a refresher, right, your growth companies tend to be a lot of the Mag 7, the Microsofts, Amazon, Teslas of the world. Your value companies tend to be, not that people don't know the names, but that maybe certainly less tech in the value index. JP Morgan, Berkshire Hathaway, Johnson & Johnson, ExxonMobil, companies like that. The Russell 1000 value is now up 2.6% for the year, while the growth, the opposite of that, the growth index is down 8.08% for the year, a little bit over 8%. So it's a 10% difference between growth and value, with growth leading, or excuse me, with value leading, and we have not really seen that.
Yeah, it's been a while. And would you chalk this up to air coming out of the AI bubble, or just a simple rotation and repricing based on everything we see going on in the market with the slowdown fears?
If you ask Bill Gates, he came out a few weeks ago, and apparently he was on one of the talk shows. He came out and he said that within 10 years, humans aren't going to be needed for most tasks, not for teaching, not for doctoring. And most regular tasks are going to be done by artificial intelligence / robots. So the bubble, I mean, it's tough to tell when you're in a bubble. Smarter software, which is the term that I use for artificial intelligence, smarter software is coming, right? And anything you can do to automate a repetitive task. I mean, when you start to see some of the robotics that are being used in warehousing just to move things back and forth, it's a little bit scary. I saw an ad the other day for, I think you might have seen it with me, robot security. Do you ever go to a grocery store here in Pennsylvania, and the giant grocery stores, they have Marty, right? The robot guy who goes around looking for spills and things in the aisles. I do not like him, by the way. I don't know why. It just something about him rubs me the wrong way.
My son demanded a Marty like stuffed robot from Giant right
Is
there
that
because
right?
he loves to chase him around, and then he sees him and he screams and runs. I'm like, we're in a grocery store. You don't need to scream. But that's a whole nother
I'll
thing.
tell you what, though. I don't think that technology is going to disappear. I don't think artificial intelligence and smarter software is going to disappear. And I don't know that I believe Bill Gates when he says that most jobs are going to be taken by robots or artificial intelligence in 10 years. But if you extend that time frame a little bit and you go out 20 years or 30 years, it's tough to see how that doesn't happen. And you look at the jobs, at least the consumer based jobs that I look at, that I call on service technicians for, whether that's plumbing or HVAC systems, things at the house. I'm not sure that they can be AI'd away.
Mm-hmm.
I don't know that you're going to have a robot come into your house to fix your toilet. My toilet's fine. Plumbing in general. But, I don't know that you're going to have that, at least maybe not in the 5 or 10 years, 20, 30, 40 years from now. Yeah, you probably will have that.
Mm-hmm.
And so you have this convergence of ideas. Everybody wants a robot to do a job for them, but they don't want their job taken away by a robot.
Yeah.
Right? Do I want someone to load my dishwasher for me? Yeah. Right?
Definitely.
But I don't necessarily want this job taken away by a robot or by artificial intelligence.
Yeah. I don't think this little rotation we're dealing with is the end of, like, there's not air or popping of an AI bubble. Certainly not. It's just, I think, a middle innings lull, a standard healthy rotation. And, year threes of bull markets traditionally do have a lull. And that's exactly what we're seeing lining up with basically the recovery from 2022. This is the third year. And if you just look at the graphs of previous bull markets, they all have that little time where they sort of waver in year three. I think this is just that. And obviously, I think the runway is very, very, very long for AI.
Yeah.
And robotics, specifically for the best application of what could be AI benefits down the line. But we actually just got an IPO, one of the first IPOs, it seems like, in a long time with how high rates have been. CoreWeave is a sort of a pure play data center. So obviously very related to the AI trend. They raised $1.5 billion on a $23 billion valuation. They were hoping for a little bit more. They were looking for $4 billion and a $35 billion valuation. So came in a little light on that and sort of traded up and down, kind of a muted trading day. And then last 2 days, they've actually been shooting up. So they came public on March 28th. And last couple of days have been good for them.
Yeah, I saw the news flashing that they were something like $30 billion in valuation.
Mm-hmm.
And I think to myself, what happened to coming out as a small company, right? You come out, you're not necessarily even in a small cap index. You just come public.
Boom,
you're a
large
small
cap.
company.
Yeah.
And that seems to have disappeared. And I'll say it anecdotally because I don't necessarily follow all of the IPOs that come out. But it just seems like everything that has come out is a monster company.
Yeah.
And you miss that growth from like when they're $100
private
million.
equity is taking a much bigger chunk of returns than previously was the case. Because, think about the 90s or even back to the 80s. Like, IPOs were cool. Like, that's what people did. Now people are trying to stay private as long as they can and before they go to market and need a market's money. Yeah, there's that much private equity money unicorn out there. Yeah.
How do you think that plays out in the next 5 or 10 years? Do more companies go the private equity route and come out as monster, gigantic, large caps?
I do think so. So, sort of going to rope this back to CoreWeave a little bit, is I'm a little suspicious of it. Like I said, it's traded up really well the last 2 days, but they have a mountain of debt. They have essentially what they did was they took loans out for $10 billion NVIDIA chips, $10 billion worth for 250,000 chips. That's just a huge loan they have. They have like 14 billion in debt actually all in. And they have these, I think it's the H100 chips, which as we know, every like 9 to 12 months, they come out with a new chip. So these chips are going to be outdated very quickly. And then what do they do with the chips after that? Obviously, they're going to still have massive computing power, but it's not cutting edge. People aren't going to pay top dollar to rent those servers and those chips when there's three generations better out there. So I don't know. Here, but where I'm getting with linking this back to CoreWeave is it almost seems like this is like some toxic debt a little bit that's being released. Like private equity was like, okay, well, we did what we could with it. Now let's reap the benefits. Let's get our exit and wipe our hands clean once the debt starts coming due and once, the profits dry up a little bit. So I'm scared we're going to start seeing all these private equities reap all the money and the IPOs essentially rip people off. I'm not saying buy, hold, or sell CoreWeave. I'm just saying, looking at the balance sheet, there's some things that are questionable to me that make me say I don't want to get into it personally.
Yeah, but it's going up.
It is going up. So I don't know. Maybe private equity starts dumping older, worn out, less lux things through IPOs now that they have so much money and, like you said, can release them at a $23 billion valuation rather than, $1 billion.
Well, so I want to delve into that just for a minute. I'm old enough to remember the global financial crisis and the run up to that. And what, it's easy to look back now, but what was happening at that point was there was such demand for mortgage-backed securities that the demand was actually driving the supply a little bit, right? Mm-hmm. So they were searching for supply of mortgages, and that's why you could go out and someone who had
the ninja loans,
the no income, no documentation loans, because there was such a high demand for that. Do you think that we're in a situation now where there's such a high demand for companies that maybe aren't public, aren't traded regularly, that it's putting the onus on the accounting of these firms to come out earlier, maybe with a business model that's not as sound as something that's been tried, true, and tested over 5 or 10 years in the market?
It's possible. Like I said, you're sometimes getting a black box with a lot of these private equity, offerings that come out in IPO. And I've always felt this way about IPOs is the people pricing it are getting the good deal because they're essentially choosing their price. And, they'll shelve it. Sure, it doesn't look good. But if it's not the price they want, it's not the market they want, they either won't bring it or they'll shelve it and cancel it if they don't get what they determine to be a good deal. They wouldn't be selling it out to you at a discount. I mean, the nature of IPOs scares me. In the CFA curriculum, they talk about, co-investing and getting in on IPOs. You have to give it to your clients first and everything. And it's like, I don't ever want an IPO. I can't really think of many IPOs where I'm like on day one, like I need to get in after it starts trading. It's just something I've never done. Just a personal thing, I guess.
There's been a few good ones.
Yeah. What'd you get on? Did you jump into any back in the day?
Square was one that I remember. Okay. I mean, that worked out pretty well, and not for people that held on to it forever, but it worked out pretty well. There's been a lot of great initial public offerings over the years. It's like this rush. Well, you got to get in, and you have to get into this investment bank to get a piece of it, and all that stuff. And
I just need to distract for 1 second here. Did you see those rumors going around of people convincing that Jack Dorsey is Satoshi Nakamoto? It seemed pretty convincing. Like they're doing GPS locators and things like that.
Jack
Dorsey, I don't think he is, but it's interesting.
I have not seen him lately. I have not seen him on the television. I have not read anything written by him recently.
Square hasn't been doing the best, so he's trying to right the ship, I guess.
Okay.
But yeah, check that out. Go in and
they think the rumor. They think he's the founder of Bitcoin.
They think he has a hand in it, that he's one of them. And they're like geotagging locations and posts from each of them because, whenever you send an email, essentially you can sort of track if you're not on a VPN. And then like at one point, we logged into a Twitter account that was linked or a blockchain. There's a whole list.
I think if he was the creator of Bitcoin and he was a multi-billionaire Bitcoin owner, he would be able to shave better.
Yeah. I don't know. Maybe that's part of his look. I don't know.
I think he should.
I just say check it out.
It's
worth checking out.
If he had all that money.
No, he's so rich that he doesn't need to clean up.
Oh, gotcha.
It's like the Adam Sandler thing, like where he dresses up. He's like, no, I can wear my shorts to this 5-star Michelin or whatever Michelin restaurant, 4-star Michelin restaurant.
3. They only have 1, 2, or 3.
3-star.
Sorry. So if we're going to change the subject, I woke up this morning, as you did, to the news. You maybe saw it last night. The news of that Val Kilmer died. And, growing up, me as a product of the 80s and the 90s, I mean, he was in all of the good stuff, right? So Real Genius, The Doors. Did you ever see The Doors?
No.
You never saw the movie The Doors?
Hey, I had to add to your list Batman, so.
I forgot he was in Batman. Yeah. The Saint, he was in Tombstone. Top Secret, I think, was one of his first movies. I actually watched Volunteers last night. Tom Hanks and John Candy. Funny movie. A lot of interesting tidbits that hold true today. But yeah, he. I think it's worth noting he was died of pneumonia after years struggling with throat cancer. So for people out there that are smoking, it's a no-go. People, don't do it. Don't do it. But yeah, he was growing up. He was in everything that I watched, and just phenomenal. Are you watching any White Lotus?
Ooh, so I kind of liked it. It was slow at first in the first season. I haven't made it through the first season. The wife didn't love it, so
you didn't make it through the first season.
I haven't
of White
made
Lotus?
it through the first season yet.
So you're not on the third season then?
Definitely not. Yeah,
I'm telling you.
I heard it's gotten weird.
There was one little incident with these two brothers.
Cringy.
Yeah, there was
these two brothers.
Well, there was a little cringiness with these two brothers, but it wasn't a big thing. It was just kind of a little tertiary portion of the plot itself. It's worth watching.
All right.
It's definitely worth watching. Yeah, there's no question about it. So going back to the market a little bit, we have a jobs report coming up on
big
Friday.
Job report.
Yeah,
I think there's going to be a lot of eyes there.
I mean, every jobs report is a big one, but now you have this situation where I think there's like an expectation that maybe it's going to be a little.
It won't
bit
be
lower.
Big in quantity.
Yeah, right. Exactly. So, it's one thing for the government to slow down on hiring. It's another to actually start reducing the workforce, which obviously they've been doing. And so depending on where you are politically, if we get a negative number in the jobs report, you're either going to say, and I don't mean to be binary on it, but I think most people will think about it like this. You're either going to say, oh, that's exactly what we're trying to do is reduce the overall labor force in the government and reduce spending. Or you're going to say, well, listen, it doesn't matter where these jobs are. We're losing workers, which will
on margin decrease spending,
or
GDP,
spending
both.
And GDP. And so I really think it is, it's the information bubble that we surround ourselves with that is going to impact your feeling or your emotion on. Not that everybody has an emotion about the jobs report. Mm-hmm. I should probably back up.
Expectations
Very
130.
Few people probably have an emotion about the jobs report, right?
We do.
We do.
I think 130 is the expectation. And again, if I'm just guessing, I would guess it is south of 130.
Well, it was 151 last month.
Yeah.
151,000 jobs were created by the economy, if you will. It wouldn't surprise me to see that cut in half. It wouldn't surprise me if it was a net neutral. The offset of Doge and new hires, and it was zero.
Yeah,
I mean, I think it's certainly possible.
Mm-hmm.
I could be dead wrong. It could be higher than last month. Doesn't seem likely though.
We got JOLTS, which came in a little cool. It was below expectation for the number of job openings, not significantly, but again, some cooler points. We've seen cooler soft data. So if you're talking about soft data, like the surveys where they're asking people how they feel or what they expect, hasn't really been the best. I know you had mentioned a couple weeks ago the uncertainty index, which literally like pulls, information from headlines, and, the uncertainty index is very high, obviously, as everybody's well aware of, with all the tariffs back and forth.
Well, Chris, I think that's what's going on right now in general. I mean, the S&P 500 is down about 7.5% from all-time highs. Is that a big deal? In the whole scheme of things, not really. But it's about visibility going forward. I mean, you've probably heard me say this a million times. You're driving down the highway, all of a sudden it gets real foggy. What do? You slow down, because you don't have that visibility that you did. And so there's thousands and thousands of CFOs out there that are in the process of kind of pumping the brakes a little bit on spending, because they need to understand what's going to happen from a tariff standpoint. I mean, that is the entire game right now, is what is it going to look like for my company? And hey, maybe we need to slow down on hiring. Maybe we need to slow down on bonuses or raises, or expansion, right? Because we don't know what the tariff situation is going to look like in 2 months or 3 months. And I personally, I think it's unknowable, because I don't think the administration knows what the plan is.
Yeah. A lot of times it's going to depend on reactions. It could go completely awry, and we could have, 2 back and forth volleys of increasing tariffs, or maybe Europe comes in and gives us concessions after this goes on tomorrow, or, today. But after this announcement. Maybe they come back with concessions and he says, okay, we'll dial it back. We certainly don't know, but between the rock and the hard places, that softening data, the slowdown I think we were experiencing and going to experience anyway is being exacerbated. And then you have tariffs causing inflation too. Potentially. So PCE came in a 10th hot, year over year, on core, and headline was in line at 2.5%. So,
personal consumption
expenditure. So while it was a tad hot on core, not good, but it's nothing that you're going to sell everything about, or expect the Fed to hike rates or something over. But again, we don't know what's going to happen. They don't know what's going to happen. And we're all in this wait and see mode, which is unfortunate. And that leads to the defensive posture where
you say unfortunate, and I'm not a pro tariff guy, but at the same time, I'm a pro market guy, right? And if the stock market is taking a pause, and that's what we're going to call it at the moment, is a pause, and letting earnings catch up, to me, that is a great thing, because you can't have a situation where the market continues to go up year after year and after year. I don't want to say it's not possible, but the longer it goes up without some type of downturn, and we did have a 2022, S&P 500 was down 20%, but they then came roaring back. We need a little bit of time to maybe pump the brakes. And I don't think that was the rationale behind the tariffs, but I'm okay pumping the brakes for a few months, 6 months, 9 months, even a year. I mean, that's okay. Let earnings catch up to the market, to the valuation, so we don't have that high valuation situation staring us in the face all the time.
And we always talk about Mag 7 was priced to perfection coming into this year, and you've seen the flows obviously leave the Mag 7 and go into the other sectors. Obviously, we know how Q1 felt. It didn't feel good with the S&P 500, squarely negative, but there were only 3 sectors that were negative. The rest were positive, because all that money in those mega caps, in the Mag 7 went to the other sectors. So, and industrials were only barely negative. Obviously, consumer discretionary and tech were very negative. But besides that, every other quarter or sector did just fine this quarter. I just have a couple here for you. Tell me if you can pick which one doesn't belong here.
Oh, boy.
So top performers in Q1, gold and gold miners. Uncertainty, we get that. Chinese internet companies, energy, insurers, defense and aerospace, and healthcare. Which one doesn't belong there?
Chinese internet, right?
Worst performers, clean energy, airlines, retail, semis, consumer discretionary, tech, and software. So since I mentioned airlines, we have something coming up on airlines. They were down 17% for the quarter, but we have Real ID coming in on May 7th, right?
Yeah.
So if you are traveling after May 7th, just make sure you have that. I think it's a gold star. I don't have a Real ID for the record. Was it a gold star that
you can use
denotes
your
it or
passport?
whatever? Yeah, I'm going to be using my passport.
Real ID because I think the whole thing with Real ID is that you have to have an original document, whether it's a social security card or a birth certificate, to get a passport.
Yeah.
But you didn't need that for your driver's license. And so if you have a passport, you don't need a driver's license Real ID. You could certainly get one. I don't have one. I'm going to continue to use my passport. Actually, no, I have a global entry, so I can do that if
fancy.
No, it's just, hey, it was like
only
$50 more.
Only 24% of Pennsylvanians right now have Real ID. So there's 76% of people in PA who are going to have to either use their passport or are going to be asked to leave the airport. So
I mean, what happens if like half the airport has to leave because that won't happen?
Well, airlines. Well, I guess
I'd hate to be working at the DMV. I don't know. I hope Doge doesn't get to the DMV.
I heard a rumor. I don't know how true is that some people are like hogging appointments and trying to sell them on the secondary market. Like, okay, buy my appointment for $40.
What? Get out of here.
I don't know. I heard it. I'm not paying for that. I'm not getting it. I have my passport.
You can walk down to the DMV right now. I'm not saying that there won't be a line, but you can walk down there, wait a half hour.
Maybe in Philly, that's not the case, though.
Yeah. I don't have to go down there anytime soon. Although my 10 years is up on a passport, and we're planning on leaving in August, where I'm going to need the passport. And
you better get that in.
Yeah, it's supposed
especially
to be
when they're cutting people in government. You better get that in. The State Department's going to be sitting on that thing.
I hope that's not the case.
You better hurry, man.
Do you have a passport?
Yeah,
you have a passport.
I have to for the CFA.
Yeah. I got you. Okay. Well, listen. Here's the real deal. Don't smoke because you end up like Val Kilmer, and don't bet against America. I think in the end, there's a lot of negativity out there, and when that is the case, you have some massive upside potential if things work out better than expected. So shorting this market or not being invested, although it might feel good, like you're doing something, I think in the end, it will actually lower your return over time. So no smoking and don't bet against America, everybody. Thanks so much for joining us. We'll see you next time.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.